And last at the table, but not last in our game, actually, is Andrew Horowitz, Disciplined Investor. That's also the name of his book. I'll give you a little plug there.
Thank you.
Andrew is he's probably been our most adventurous trader this round, and that's saying something. I think he was the first one into some preferred stocks. At one point, he was short New York City. That was a good one. And lately, he's been short an ultra-short ETF, which, if you know what that means, it's an ETF that goes up twice as fast as the market goes down. But he was short it, so you have to turn all that around. It's worked for him. He's up. I was looking earlier today. I think at the end of the day, he's actually taking all his profits today. At the end of the day, he'll be up 12 or 13% for the last 4 months. That is, I'll just say, a whopping advantage over the market. Andrew, is that coming from your strategy, and are you changing your strategy today?
Well, here's the thing. Since the last number of months have changed a lot of things, and I think that that maybe a rebel is a better kind of description of what I'm doing these days, because I'm challenging kind of everything that we know, what was told to us from the time we were little investors till now is really proven to be very wrong. In fact, the market we know has always been somewhat rigged. We know that, but we play inside the rules. But the problem is that those who allowed us to play inside the rules for so long and let us profit have kind of turned their backs on us, and they've really squashed the people that held the market for them. And we see that with the Goldman and the things that happen. If anybody was here in the last Strategy Lab, or listened to my podcast, or follow the Strategy Lab, when oil was at about 140 or so, and everybody was predicting it going to about 200, I said, listen, you got to wake up. What's happening is not what they're saying. They're pushing this for their own advantage, and you need to look why this is. And it looked kind of odd at the time, but you look at that and you see, here's what's going on, and that's been happening and replaying itself over and over and over again. And now we have the government doing the same kind of thing. When they banned the short selling rule, I was shocked, because it was an integral part of the markets. So the strategy that we all like to use, whether it's fundamental, quantitative, or technical, which I use and I teach and I adhere to, a lot of that is broken. A lot of people, I find so many traders love to use technical analysis, right? Because why? Because it gives us an answer. Well, I should buy there. I should buy there. The chart tells me to, and we don't go through the process a lot of times. So the strategy that I've used is always going to be the same: to find stocks that have excellent growth potential, that meet criteria that are based on my quantitative screens, and that meet technical analysis key points, and then utilize sell stops to make sure that I don't, get hurt. Always, always, always hedge your portfolio. Always. That's one thing that I think that for the most part, most people don't do. But in the end, the bottom line is that I am not finding a lot out there that makes a lot of sense. And when you mix all that with the current economic climate, truthfully, you say the market's up today. Did everybody see the numbers today? We see the economic numbers today. The employment numbers were 6.5. GM came in with an awful number for earnings today. I think down 7 a share. Housing numbers looked awful. And it's really a problem, and it's not going to get better right now. It's not getting better. As a matter of fact, it's getting worse. So to believe that we could just go out there and pick up a mutual fund, which I'll get into in a minute, talking about mutual funds when we come back, but I don't think that's the game anymore. So the answer to your question is I don't change my strategy, but my strategy changes with the time.